Hi guys, welcome back to the Game of Trading channel. This is Barker. Here is the exclusive candlestick series. I'm back with another vital candlestick, which is Hanging Man. I was personally experienced on few backtested on my trades with the Hanging Man. Here I am representing you guys for a Hanging Man, which is Bearish reversal candlestick. A tiny note for beginners: candlesticks are very important. For beginners, those who are entering into the trading, first learn, then start earning. This is one of the best known bearish reversal candlestick. A hanging man is a pattern that occurs after a price advance. The advance can be small or large, but should be composed at least a few price bars moving higher overall. The candle must have a small real body and a long lower shadow that is at least twice the size as the real body. Why hanging man candlestick is bearish? After a long uptrend, the formation of a hanging man is bearish because prices hesitated by dropping significantly during the day or an hour in different time frames. Granted, buyers came back into the stock or future or an option and pushed prices back near the open. Is hanging man red or a green? Opening level, the hanging man candle can either be a green candle bullish or a red candle bearish, although the bearish candle provides a better indication of a weakening market. What does the hanging man pattern look like? The hanging man formation, like the hammer, is created when the open, high and close prices are roughly the same. Also, there is a long lower shadow which should be at least twice the length of the real body. Red versus green hanging man. When the high and the open are the same, a red bearish hanging man candlestick is formed. This trend is considered a stronger bearish sign when the high and close are the same, forming a green hanging man. Although the green hanging man is still bearish, it's considered to be less so because the day closed with gains. Hanging man versus hammer candlestick patterns. I was already recorded one video regarding hammer. The link is available in the description. If you want to check, please go through the link. The primary differences between the hanging man pattern and the hammer candlestick pattern is that the former is bullish and the latter is bearish. That's because the hanging man appears at the top of uptrends while the hammer appears at the bottom of downtrends. How does a hanging man candlestick mean? Below of BankNifty or Nifty showing a hanging man, the red bearish candle after the hanging man strengthens the bears thinking that a downtrend reversal is coming in chart. The market begins the day testing to find where demand would enter. The market price eventually found support at high low of the day. Confirmation that the uptrend was in trouble occurred when the next day and the continued downtrend, creating a large bearish red candle. How to trade on a hanging man candlestick? To some traders, the next day's confirmation candle plus the fact that the upward trendline support was broken gave a potential signal to go short. It is important to repeat that the hanging man formation is not the sign to potentially go short. Other indicators such as trend like break-even or confirmation candle are. It is important to repeat that the hanging man formation is not the sign to potentially go short. Other indicators such as a trend line, break or confirmation candle should be used to determine sell signals. There are different variations of hanging man candlestick chart pattern. Here I am presenting you guys few backtested indexes on BankNifty and Nifty 50 with the time frames of 5 minutes and 15 minutes. So spot the hanging man candlestick patterns quickly and win the potential reversal trades easily. Use that information to make profitable trading decisions. My next video is about inverted hammer. Hope you all like this video. If you are a new viewer, kindly do like and subscribe. If you have already subscribed my channel, do like, share and comment. Thank you.